Tax planning, start early. A lot of folks want to do tax planning during tax season. It's too late. Tax planning is like having a child or creating a business. You got to do it within that tax year. The way to take advantage of tax planning, on the real, there's not a lot of tax planning individuals can do without having some sort of a corporate entity or corporate structure. Having an LLC or an S-Corp is always going to be your best friend. One of the things to consider when you're doing tax planning is who you're going to put on your board and what are the tax planning strategies you're going to take advantage of. If one of the tax planning strategies you're going to take advantage of is hiring your kids, well, you don't want to put your kids on payroll in November, December. You won't be able to maximize the full year to get the maximum deduction. For 2024, you can pay your child up to $14,600, get a complete tax write-off, and your child won't have to pay any income tax on that. They will be subject to payroll, but they're only going to be subject to the payroll tax from you as the employer. Them as the employee will not have to make a contribution if they're a minor. On top of that, you can actually increase it another $7,000 so they can contribute to their traditional IRA. So now they're paying another $7,000 into their traditional IRA. By the time they hit 18, they could have 20, 30, maybe $100,000 saved into their tax planning account. That's pretty awesome. You could also take advantage and maybe use it as a Roth IRA. They won't get an income tax deduction, but now that money's going to grow tax-free. But you can't do this next year when you come over to me, your tax accountant, and say, hey, listen, I want to put my kids on payroll. It's too late. We can put them on payroll though, but that's going to be for the following year. At least I would like to say the last quarter, you want to put them on payroll. So it gives you a good 3 solid months to try and maximize that $14,600 deduction that you can put them on payroll for. Take it as a deduction to your company and be a tax-free income that they don't have to file a report on their personal tax return. Another thing is if you're going to put your home and you're going to use the Augusta rule and you're going to claim your home as an office deduction, you want to do that before tax season ends. 99% of Americans, the last day for this to happen will be December 31st. Most of us use the calendar year. Some people have a different fiscal year, but for the most part, it's going to be our calendar year. You want to maximize the Augusta rule where you're allowed to rent out your home to your business, all right, and take that as a tax deduction. You can personally rent out to your home to your business for 14 days, all right? Now, as long as it's reasonable, all right, as far as the expense goes and is comparable to other things, you can rent out to your home, to your business, so your business can have corporate meetings, events, and that's 100% income tax deductible for your business, and you don't have to report that as taxable income on your personal tax return. These are things that you want to take advantage of and do early before December 31st. And for some strategies, you want to do it a lot sooner than that. For more information, more tips, more things you can do to save money and maximize tax planning, follow and click on the link below.